Welcome to the Value Side of Finance. It's a guide to the changing geography of investing, our look into little-known corners of money and the economy. Now today on Value Side, will today's reports on labor show a resurgence in manufacturing and production? Now there are no earnings reports scheduled for today, but plenty of economic reports, and they're all coming right up. This is the Value Side for October 5th, and I'm David Ravel. Now today's preview should not be considered a recommendation of any of the securities discussed. Well, today we'll get to see a series of reports on the U.S. labor market, and these are the most widely anticipated reports that I've seen in quite some time. This past Wednesday, ADP released their payroll data. As the nation's largest provider of private sector paycheck production, ADP is in a perfect position to establish the current level of employment in the nation. And their report was a blockbuster. ADP estimates that the nation gained a remarkable 230,000 new employees for the month of September. That was well above the Street's estimate of 184,000. And this, combined with other strong economic data on the private sector, has Wall Street looking for very big numbers in employment today. In labor reports published today, we'll see the unemployment rate expected to tick even lower to a mere 3.8%. The average weekly hours worked and average hourly earnings both expected to report higher levels, reflecting the increasingly tight labor market. About the only languid report in these will be the labor force participation rate. This is the number of people currently working in the economy, and it's expected that the participation rate will show that fewer than 63% of the total population is currently employed. But the most important part of this panoply of reports, in my estimation, will be the Labor Department's non-farm payroll report. Look for the complete report with all the details over at the Bureau of Labor Statistics. That's at bls.gov. And what this report likely will say behind the headline numbers is that an economic giant may be coming back to life. Now, a little background. ADP and the BLS divide workers into two sectors, service and production. And for a generation now, service has been the dominant working sector in the country. For those of you who are old enough, you may remember that virtually all consumer products, for instance, were produced in the USA. But that's not true today. Electronics, consumer goods of all types, household items, apparel, all now produced overseas. And according to the ADP report, that could be changing. You can tell by the way that the production sector is beginning to hire new employees. In August, ADP reported that the production side of the economy gained 24,000 new workers. This is perfectly consistent with the Labor Department numbers up to then, which shows gains of about 20,000 plus per month in production for the entire last year. In other words, that's just the replacement level for production. But on Wednesday, ADP reported that the production sector gained just about double that level. 46,000 new employees reported for the production sector of the economy. That's replacement plus a whole lot of new workers. This would mean that production may be coming back. Now, the ADP report has been notoriously volatile this year, and perhaps it's only a statistical anomaly. But if the Labor Department also reports the same kind of thing this morning, we may be at last seeing confirmation of a resurgence in the production, manufacturing side of our economy. It's a much-needed boost for an economy which would potentially be working on all 8 cylinders for the first time in perhaps a generation. Now here's how to read those numbers. For over a year now, the goods production of the non-farm payroll has shown a hiring rate of 20 to 22,000 per month. That's replacement workers, workers who are hired to replace someone who has quit or retired or been fired. It's not a growth rate, it's a no growth rate in the low 20,000s per month. If we see that, it's likely nothing is happening in the manufacturing production sector of the economy. But if we see producers beginning to step up and hire in the rates of 30,000 or especially 40,000 in this month, then we are likely seeing the beginning of an expansion, new people being hired, new positions being created to produce more domestically. It would mean that the production sector is beginning to expand, indicating potentially that America is once again returning to a production manufacturing powerhouse. Now, all this is early, and it is still just potential, but it would be a step in the right direction. Now, there are no earnings results today on our calendar, but that is more than made up for by the BAFO economic reports. In addition to all of the labor reports we'll see today, we also get to see the report on consumer credit, expected to be up $15 billion month over month, and the report on the U.S. trade balance, expected to come in at $53 billion deficit back in August. Oh yes, that's reported by the Census Bureau. Now, the really big show begins at lunch when we have those 6 reports on the health of the labor markets in the country. Of course, the one I'll be looking at closely will be that non-farm payroll report. But the other reports are the unemployment rate, the hourly earnings rate for September, both month over month and year over year, and the average number of hours worked per week, and finally, that labor force participation report. All these reports come at once at 12:30 Eastern Time. And those are the reports that we're previewing today. We'll be back on Monday to review the report and look forward to a new group of companies as earnings season continues. This has been a copyrighted edition of ValueSide, published before the opening of the New York Stock Exchange for Friday, October 5th. Don't forget you can hear ValueSide on Google Music, TuneIn, SoundCloud, iHeartRadio, and in the Apple iTunes Store. For all of us at ValueSide, I'm David Ravel, hoping you have a great day.